Three options: book squaring, China, tax reform.
I think it's a combination of the three. I think at the end of the day, you're looking, it's early December in what's been a great year for equity markets. Clients are happy, they're feeling good, they want to lock in some profits. I don't think this is anything unusual. What's been unusual has been the lack of sell-offs that we've seen. 13 straight months in a row of up markets for global equities. Going back to 1970, we've never seen even 12 months in a row. So I think this is just a little bit of a normal clearing of markets, some profit taking, nothing that we're really worried about.
Chris, do you agree? Because copper might tell you differently.
No, I would agree. And I think actually if you looked at positioning a couple of weeks ago, it was quite extreme and stretched towards the things that are now rotating the other way. And if you look at December, it has classic seasonality. It generally sells off into about the 13th, 14th, from about the sort of 4th or 5th. So maybe a few days early on that pullback, and then you get your Santa rally from mid-deck into year-end. So I like it. I think it's, markets are doing what they're supposed to be doing.
So what does that tell you as you go into the new year? I mean, you're long equities. You think you stay in equities, even though the valuations are really pretty stretched, I think it's fair to say.
Yeah, the valuations are stretched, but valuations really never signal the end of bull markets. Bull markets end when money gets tight and the corporate sector comes under pressure and there's excess in it. And there's none of that at the moment. So I'm encouraged. I think we're in a bull market and there's plenty more to go for. And there's plenty of people out there worrying about it, which is always good news.
Well, what about the financial conditions? Might they get tighter, actually tied to tax reform or tax overhaul? I mean, might it drive the Fed actually to raise the rates faster?
Well, I think we could see some tightening. I think the Fed markets are pricing in possibly 2 hikes next year. We think it could be 3 or even possibly 4. I don't think that's a bad thing. They're doing it more because of the synchronized global growth story because they can rather than because they're being forced to. If we were to see a surprise in inflation, which would force their hand, that would give us some pause, but we don't think that financial conditions will tighten to a point where they can stop what is this synchronized global growth story.